Welcome to this tutorial on Betterment ETFs, a comprehensive guide to understanding this popular investment option. To begin with, let's define what ETFs are. Exchange-traded funds, or ETFs, are investment funds that are traded on a stock exchange. Like individual stocks, they hold a basket of assets, such as stocks, bonds, or commodities, and are designed to track a specific index or sector. Betterment is a robo-advisor that offers ETFs as a core part of its investment portfolio. The company uses ETFs to create diversified investment portfolios for its clients. With a focus on low costs and tax efficiency, Betterment's ETFs are selected based on their low fees, trading liquidity, and ability to track their underlying indexes. One of the key benefits of Betterment ETFs is their diversification. By investing in a range of assets, such as U.S. stocks, international stocks, and bonds, investors can reduce their risk and increase their potential for long-term returns. For example, a portfolio might include ETFs that track the S&P 500 index, the FTSE Developed Markets Index, and the Barclays U.S. Aggregate Bond Index. Another benefit of Betterment ETFs is their low costs. The company's ETFs have low expense ratios, which means that investors keep more of their returns. This is especially important for long-term investors, who can see significant savings over time. For instance, an ETF with an expense ratio of 0.05% will cost investors 0.05% of their investment each year, compared to an actively managed fund with an expense ratio of 1%. In terms of best practices, it's essential to have a clear understanding of your investment goals and risk tolerance before investing in Betterment ETFs. Investors should also consider their time horizon and overall financial situation. For example, a young investor with a long-term time horizon may be able to take on more risk and invest in a more aggressive portfolio, while a retiree may prefer a more conservative approach. To get started with Betterment ETFs, investors can simply sign up for an account on the company's website. The process is straightforward and easy to follow, with clear instructions and guidance throughout. Once an account is open, investors can deposit funds and select their investment portfolio, with options ranging from conservative to aggressive. In conclusion, Betterment ETFs offer a low-cost, diversified, and tax-efficient way to invest in the markets. By understanding the benefits and best practices of these investment products, investors can make informed decisions and achieve their long-term financial goals. With their low fees, range of assets, and ease of use, Betterment ETFs are an attractive option for investors of all levels.